Welcome to Beyond Bitcoin, a podcast about all things digital assets, the global communities they are creating, the generations that are using and investing in them, and the challenges faced by the nations that are seeking to regulate them. The content of this program is not to be taken as investment advice. My name is Derek Graham. I'm the CEO of Portal Asset Management, and my co-host is Nitin Gower, Director of IBM Digital Assets and CTO of Portal. Good morning, good afternoon, good evening, wherever you are in the world, and welcome along to another episode of Beyond Bitcoin. So with me, of course, today is our friend and colleague, Nitin Gower. Good morning, Nitin.
Hey, Derek. Good morning to you and good evening to me. Glad to be here again. Another exciting week. Looking forward to it.
Yes, juicy topic today, because it's a topic that people don't normally jump straight into. And we've got a special guest with us today who we'll introduce in just a moment. But you've often heard me speak about my view that the world of exchanges, stock exchanges like the Australian Securities Exchange and the New York Stock Exchange are in essence giant siloed exchanges with finite capabilities and run on a tradition that's been around for 150 years. So let me define that. You know, if you're based in let's say you're based in Mumbai, are you going to be trading Australian securities? Well, you're not, because it's too damn hard. Unless you've got a Bloomberg screen and you can access half a dozen different services, getting onto that world is very difficult. And also, to be a listed company in Australia or another nation for that matter is a highly complex, highly expensive process that involves a large number of third-party consultants, and really to get on a little exchange like Australia, and I define that as little in comparison to New York, it's $1 million process. So let's talk about security tokens, because I think it'll revolutionize the silos of the world that we see now, and it'll expand what can be traded in these worlds. And with us today, we've got Jonah Schultman, who's from Security Token Market. And their tagline, I love Jonah, it's brilliant, taking the wall out of Wall Street. Hello, Jonah, and welcome along.
That's exactly right. Thanks for having me on, guys. Excited to be here.
So maybe you could, obviously, we always start the beginning a bit high level so everyone can get an understanding of kind of the geography of this space. Talk a little bit about, please, what Security Token Market does, and maybe address this possibility of changing the way these siloed exchanges work around the world.
100%. So just to back up a little bit, we've been around for about 4 years, and what Security Token Market is a information and data source. So when we came around, you know, there's exchanges, maybe like T0, these specialized exchanges to trade these assets. And before I actually dive into that, we'll keep it high level. Is a security token is a traditional security that runs on the blockchain, right? So that could be a private security, a public security, but you simply flip the switch, you put it on the blockchain. So that really opens up the floodgates to the number of investment opportunities for everyone. So it democratizes access for the little person. That's a huge value add to me. So, you know, wherever you are in the world, you could be looking at an apartment building, a real estate building, maybe your favorite sports team, a restaurant, a supercar, a global investor base, and that global investor base can trade it on a specialized exchange. So that is kind of like a cool way of looking at our industry. And what we do is we disseminate all of that information, all that trading data into one global hub for everyone to track that data and track the information.
So Jonah, it's not just traditional assets that can be in this world. It can be obviously digital assets, very high value digital assets of some form or other. And that there's two questions I really want to get an understanding in. And that one is, you know, the difference between NFTs and security tokens. And if you fractionate an NFT, does that mean it's a security token? Where's the line there so that everyone has some clarity on what the security token is?
For sure. So there's a really interesting line there, and a lot of people, I will say, are bending the securities definition, to put it lightly. So an NFT is a non-fungible token, which means there's one of them. There's one of one. They're not interchangeable. You can't trade them. versus a security, maybe like an Apple stock, a share in Apple is completely fungible, meaning like me and Nitin or me and Derek can trade it together. You can swap them interchangeably. And then with an NFT, it's kind of like you own a collectible and it's just one of them. So it's bending the definition a lot. If you fractionalize an NFT, by definition, you're really bending the securities laws. I'll give you an example. So a huge NFT platform you may have heard of called Bored Ape Yacht Club. Yeah. It's one of the biggest NFT platforms and they are killing it. They released an NFT probably 2 years ago and they made a ton of money, and the NFT floor is probably over 100 Ethereum. And that's amazing for the holders. You know what's even more amazing? The parent company, Yuga Labs, who actually own it. So they raised like $450 million in the seed round at a $4 billion valuation, which is probably the most valuable seed round ever. And what's interesting is that the Bored Ape Yacht Club holders got a distribution of a cryptocurrency backed by the company, you know? So it's interesting how that's working. They're definitely bending the securities laws. You can't do that, is the point I'm making.
Yes.
So that's kind of like the definition where you have the NFT is you're supposed to just hold it and it's just one of one, versus securities is like it's interchangeable. If that makes sense.
It absolutely makes sense. Now, of course, the great advantage is the technology associated with security tokens that are so much more advanced than really an analog shareholding that gives you a right to vote and it gives you dividends or possibly some options, which is the sort of the world of traditional. So Jonah, in the world of traditional exchanges, they're quite limited in the capability of what each one of the stocks are doing. It's an analog environment, really. And each stock is capable of distributing a dividend and providing a voting right, or maybe providing an option, and that's about it. Whereas in the world of security tokens, you can provide potentially not just all of those features, but other smart contract opportunities, which enables, the investor to become a consumer and get benefits from buying into that particular company's products and services, etc. Do you see that as important, and do you see that as going to be a big part of what is smart contract driven world and security tokens?
Yeah, Derek, that's a great question. I think that's one really, really powerful use case is, enabling perks and benefits to shareholders. And that's something that we're still seeing today in the traditional world. For example, with Royal Caribbean shares, I believe if you have a certain amount, you get discounts on your cruises. But the problem with that is there's millions, if not hundreds of thousands of shareholders, and these shareholders are held in street name. And what that means is their name is held in one, pocket of names within a broker. So for example, Robinhood is a very powerful or very popular exchange. Royal Caribbean doesn't know who actually owns each share. They just know how many shares are within each broker or, platform that plugs into the exchange or whatnot. So I think that's powerful because we'll actually know who owns what. So for example, there's actually a company that does this, and I'm not sure if it's fully 100% blockchain yet, but St. Regis Aspen, which is, St. Regis is a very powerful hotel chain. The specific location of St. Regis Aspen, they tokenized, I believe, 18% of the property.
Wow.
Sold 18 million in a compliant security token offering to people all over the world, and now trades on a specialized exchange called T0 at about $1 a share. And if you own a certain amount of shares, you get discounts at the hotel and you get all these other perks. So I think it's a cool way to get people to invest, etc. But there's way bigger things about smart contracts of what you can do.
Yeah. So Jonah, this is interesting, right? And I think this industry is sort of awash with acronyms and new terms, which makes it interesting to communicate in the industry per se. And I just wanted to sort of, I have a two-pronged question. The first, question is, I do discern between security tokens and tokenized securities. And here's the pitch. So many of the newer trading platforms like T0 and many of the ATSs are trying to focus on capital formation. These are ability for brand new companies to raise funds in a compliant tokenized form. So instead of going down the IPO route, they're sort of issuing tokens as, and I would label them as security tokens. And tokenized securities is, to me, a avenue for us to take existing securities, the 4 asset classes, and tokenize them, which is basically taking the dematerialization that we have been doing over the years, converting them to tokens so they can fit the newer, which is the digitization of the entire industry. Is that the right way to think about this?
So just to clarify, so you're saying security tokens is like the origination at the fundraise, and then it's on the blockchain at the whole entire time. And you're talking about a security that has already completed the fundraise process and just sitting idly as a private company, and then you tokenize it and it becomes a tokenized security. Is that what you're saying?
Correct. So I'm looking at this as security tokens, which is again from birth to inception to trading, and if the entire life cycle is born on the blockchain and has the connectivity, has the interoperability. And the tokenized securities, again, is a modernization angle to me to say, hey, we already have securities in place. All we're doing now is whether we're tokenizing funds or tokenizing securities and bringing them to the modern sort of age of transaction systems. And in the past, I've looked into this as 2 discerning capabilities, because depending on who you talk to, there's oftentimes a whole confusion around ICOs to STOs, and I would like to discern the fact that STOs are compliant. They actually follow the rule of law. They actually are regulated. They follow all the things that regulation asks them to do. And at some level, there's market for both, right? One is solving capital formation
100%.
issue, which is efficiency and everything else. Is that the right way to think about this?
I think there isn't no right or wrong way. We're in its infancy. There's a lot of different terms going around. I think we're just arguing semantics at this point. I would argue that is a security token, tokenized security, digital asset security. Those are kind of all interchangeable. But yeah, it's a security compliant. Well, we all, obviously there's securities out there that aren't compliant, but we consider a security token. I'm not a lawyer also, just saying. But obviously there's a lot of securities out there, and the ones that are on the blockchain, we consider security tokens.
Got it. And it's funny, you mentioned you're a lawyer. In blockchain space, I think everybody who's doing a blockchain is an economist, a game theorist, a lawyer, and a technologist all at the same time, because we all speak the same language and we begin to sort of, spill over. The second question I have, Jonah, is on the thing that you mentioned with an example of T0, which is basically creating that sort of specialized marketplaces. And so there's something called market structure, as you know, right? There are people there's DTCC, which is central bookkeepers. There are people who post collateral. There's broker-dealer networks. There are sort of custody banks. There are people who post collateral. There are people who, all these counterparties form the market structure that allows for these securities to move from point A to point B, which is the old sort of, framework. And then we have now the T0s of the world and the newer sort of market structure that's emerging, which is sort of collapsed, right? If you look at Coinbase, for example, Coinbase is dealing with commodities, they're dealing with securities, they're a bank, they're prime brokerage, they're pretty much everything in one single sort of shop. And I just want to get your perspective that as I'm looking into this industry and dissecting it, is one, the perils and the challenges of this fragmented market structure and the advantages, because now there's there is a gap between all these different entities, which gives the market time to react, as opposed to a much more faster sort of velocity of transactions that are happening in this space. Just want to get your perspective to see, do you see any, and this is more of an intellectual debate that I'm having with myself, is are there any advantages to existing system? And yes, we are trying to solve the issue of time and trust with blockchain, but as we go into a model that you described, which is, there is data that's implicit, there's a market structure that is built in. Is there any drawback of that model? And that's first question. Second question is, which is again my focus in the foreseeable future, and I've had this conversation with many of the industry leaders, is I think this industry needs to grow in a meaningful way where we are taking the real world assets, which is basically taking the existing infrastructure, existing asset classes, and bridging them to DeFi. So TradFi and DeFi bridging, which I think will be a clash of that structure, that you now have a faster collapse structure here, whereas if I'm trying to build and move the traditional finance into just more, I know it's a lot to unpack there for our audiences,
sure.
but just love to get your high level thoughts on how do you see this unfolding, if that makes sense.
Yeah, for sure. So I think, yeah, there's a lot to that. So backing up a little bit, I think in, NFTs and ICOs and in DAOs, there was like every year or two, there was this boom, right? And that is because there were zero barriers to entry. Everyone thinks that security tokens, they were talked about it like what, 3, 4, 5 years ago. Like, why hasn't it boomed yet? Why hasn't it boomed yet? It's because NFTs and all that, they don't follow any regulation. There is no regulation. There's no precedent around them, right? So with security tokens, I think it's going to take a lot longer for us to hit the mainstream or whatever you want to call it, because we need regulation to catch up. If there's no regulation, and I mean, we follow, traditional securities laws, but we kind of bend it in a way where we enter a little bit of gray area where we add a blockchain component within the existing framework. So I think the innovation is already there, right? But the regulation is slow to creep up, and that's what's going to get us to the mainstream. But to answer your question, so the first question was drawback. What are the drawback? Like, obviously the world is moving to a blockchain infrastructure, but you're like taking the devil's advocate approach, like what are we missing here, right? Okay,
That's absolutely what it is. Yeah.
Yeah. I mean, at the end of the day, I think the only drawback I could think at the top of my head is that if we do it on a public infrastructure, right? If we don't have oversight from the SEC, the whole rule of the SEC is to have investor protection. That's my main concern, and I don't think that's going to be a legitimate scenario. The closest, convergence I see there is what we're already seeing with, like, ARCA has an approved 1940 Act investment fund.
That's right.
There's other assets, if you've heard of Realty, does something similar where you whitelist addresses, whitelist investors to have them. It's almost like a closed system within an open system. So you can, you're an investor in this company or asset, but you can trade it on a public blockchain marketplace. That's how I'm seeing the pinnacle. It's like we can move internationally instantaneously, but as long as you're whitelisted and you're KYC'd, AML'd, and onboarded properly, we can all do this compliantly and use the benefits of blockchain at the same time.
No, I tend to agree. I think, and I've used the term fence. And again, not being devil's advocate, I think just trying to have the intellectual conversation in the industry that we all not drinking the blockchain Kool-Aid, even though both of us have been in the industry for quite some time, is trying to figure this out in a way that's more compliant and ability for us to be able to truly transform the industry. And I was working an article today, Jonah, and I came across an interesting sort of pitch on this, is that until now, we were going after transforming via digital, and which is basically using digital transformation of what we're doing. And I think blockchain, DLT, metaverse, Web3, or the entire gamut is truly transforming digital. So from digital transformation to transforming digital, it's a pretty profound statement to say we are truly going down the path of digital handshakes, digital ability to enter into digital contracts, and supporting all the modalities that we have talked about in the past, which means that the disconnect you have from private markets to public markets, at the end of the day, I think as you're building these things, the interconnectivity should be seamless, that whether I'm building an STO or whether I'm taking a real estate, I should be able to have an interoperability layer. So I think you're spot on that front, right?
And we have that and interoperability, used to be a pipe dream. It used to be something that we just talked about years ago. Like, oh, this is a potential benefit. We're still talking about potentials here. Like, none of this is, it's not 100% blockchain. We all know that. There's still transfer agent. You still have, traditional third parties just due to compliance reasons and regulations. But I actually did something that I don't think has ever been done before. And I'm not doing it to toot my own horn. I'm deep in this space. I'm trying to experiment as much as possible. You can I actually arbitrage successfully because, so backing up a little bit, there's a company called Exodus, right? Yep. Exodus tokenized their shares in their company, right? They raised $75 million and they trade on 2 exchanges that are marketplaces that specialize in security tokens. So I purchased it on one marketplace, T0, and I moved it to securitized markets because I noticed a wide spread, a very large spread. I profited about 40%. It wasn't anything to write home about, but it shows it's if you compare arbitrage to the traditional world where you make millions of dollars off pennies, right? It's nothing. But it shows the early stages of where our industry is going, how I was actually able to move my asset compliantly on chain through the blockchain to another marketplace and sell it for a profit. So T0 actually sent it to an Algorand based wallet where I actually held the Exodus share, and I was able to send it to a blockchain address on Securitize and sell it within a day. I mean, it's not instantaneous, it's not the best, but we're moving towards that direction.
But don't you think that's a flaw in the market? In the sense, if you look at the seminal paper from Finch, which looked into efficient market hypothesis, it's been 25, 30 years. And anybody in financial industry should read that paper because it talks about market data. And the whole idea behind the paper is that if we all have information symmetry, if everybody has all the information all the time, the markets reach equilibrium, which is basically bridging the gap between demand and supply. There is a efficiency in that, and that's the efficient market hypothesis. And I've looked into this for the longest time in terms of where the data gaps, and this is where you come into, because you also are looking into being the leading global source of data and news on tokenized assets, which I think. So, I'd love to get your take on this, Jonah, as you are not only experimenting and you're building these things, but you're also figuring out to say, well, why is there an information gap between two markets while there's abundant data in this industry? What gives, in the sense that in traditional markets, you have a small basis points, and like you mentioned, over pennies, you're making all this, and that's also a flaw in some cases. I think it's a time lag, which in my opinion should not happen with blockchain, because the blockchain technology in general gives us unfettered access to all the data, not confined, unless you're going to order booking data, which is confined. So I'd love to get your thoughts on that as well.
Yeah, I mean, there's a couple of points. There is, even though the data is public for everyone, it doesn't mean that they're going to be able to see it. With publicly traded companies, like maybe like an Apple stock is a great example. They're tracked by so many analysts, so many people. So like anything happens, it's like an instant effect, if we had an algorithm that was trading and going through the blockchain and seeing all of these different variables, then it would automatically execute. But I also see it as a potential catalyst for security tokens, because there is an information gap, and these are private securities and a lot of people are trading them. There isn't a ton of information. You can't make millions of dollars, but there are some money making opportunities here if you're really watching closely. And that's exactly what I think arbitrage is doing for our industry. Is it's going to actually bring more people in, because it's a money making opportunity. It increases liquidity, increases trades, and increases investors because they can actually make money.
And ultimately increases efficiencies and increases, visibility of the assets. And what this is showing us, of course, this is what you're experiencing here is typically what a small exchange experiences. A very small exchange often experiences periods of illiquidity, periods of not price visibility that is good enough for people to understand how it's operating. And that if there's a similar, if the security is co-listed in another space, and I've been involved with companies that have listed them on in the Australian Securities Exchange and in the Frankfurt Exchange, arbitrage occurs. And what you're hoping is the arbitrage gets very, very close and narrow, and it's start to trade, because then you're getting the efficiencies of the market coming back in place and price discovery appearing again. But in very small turnovers, you're not getting that. And maybe that's where we're at the moment in this particular marketplace. I get a sense that, we're at the absolute primordial aspect of this marketplace, when we're seeing these combinations occurring between, what Coinbase is doing, T0 is doing, the security token market like yourself are doing. We're still sort of discussing where ICOs and DAOs and NFTs sit into all of this. It's so early in this space.
So early. It was so early 4 years ago. It's great. Like, I've been on the content side of things. I've been doing, I know obviously you wear a lot of different hats in a growing company, but I've been really focused on building content. And when I first started with the company, I had so much trouble even finding content. All I would talk about are the hypotheticals of what this technology can do. And now we're actually seeing what it in real time. Like I would, we'd make posts about like interoperability, arbitrage is a possibility. Now it's actually happening, but it's so early. And to your point, even further is, NFTs, cryptos, DAOs, like all those blockchain subsets are so small compared to the global capital markets. I think Nitin, didn't you even say this at the Vertalo conference, that the potential addressable market is like 4 quadrillion,
2.4,
which is a ridiculous number.
That's the number I used
in
to
the
this ridiculous number.
Yeah. So I mean, crypto is what, less than 2 trillion? It's nothing compared. If you want to compare, which they're not really comparable.
That's right. And not only that, but you're comparing crypto, you're comparing crypto, which is the entire economy of cryptocurrency. Every aspect of how cryptocurrency works, every facet of the business and these sovereign states, $2 billion. It's tiny. So what's fascinating now is that I am often asked by traditional investors, so it's a new boom. Where's the picks and shovels? How can I invest in the picks and shovels? So security token market, are you a pick and shovel, Jonah?
Hey, anything's possible. But it's possible. Yeah, I can I go into that a little bit. We're at the forefront of this. We're trying to, as one of my colleagues at work like say, we're trying to LeBron James the industry, which I think is a hilarious analogy. But we decided, because we've built a very strong security token community, and for 4 years we've just been doing consistent content, consistent research and data, trying to really position ourselves as the global source and hub for security token data research. I think we've done a pretty good job of that. Long way to go to keep building.
Yeah. So let me ask another question on this. One is, so you mentioned T0. We talked about Vertalo. That's the conference we went. We met at. And then you have Oasis Pro Markets, and then you have you guys, which is the STO markets, and then you have market makers, and you have liquidity providers. Doesn't that begin to mimic the digital sort of version of the analog markets? For example, so where do you see yourself? Do you see yourself as Bloomberg's and Refinitiv of the traditional markets? Do you see yourself as, for example, fund advisory services, because you're in that, you're providing some of those elements? Or maybe it's not fair for us to even compare to what we know of existing market structures, say, hey, this is a completely new world. And there could be a dual function of an entity like yours, or a dual function of an entity like an exchange, who is not only providing exchange services, but also providing custody services and providing broker-dealer services, which oftentimes is a service provided by distinct entities in the traditional market infrastructure. Does that make sense?
I think
so. Where do you see yourself?
Yeah, for sure. And I think a lot of those players also, they'll still do the traditional processes we have, but it will be an evolution of that, like build on top of that. So just a quick analogy is, you have a normal company, a strong community, they use an NFT and it's an extension of value to build off of the brand. So that's kind of an example. But for us, where we see ourselves is, we have a couple of different business verticals. We definitely want to do the fund model. That's on a different subsidiary within our holdco with Secure Token Capital. But for us specifically, I guess you could put us closely to Bloomberg, where we're like the data oracle for all blockchain-based securities and just tokenized assets. We're going to be raising this capital to really revamp our entire website, to build trading tools, gamification, and better data structures and all of that. Really revamp that. And then we're going to be having, we're going to create the STM index, which is going to be cool, and all this cool stuff.
No, that's exciting. That's actually very exciting. Looks like you have a lot to look forward to, Jonah.
Absolutely, it's a lot of fun.
A lot of changes. Yeah.
It's please.
So, as we're getting on in time, and it's typical, this is another one we could just keep talking about and talking about, because we are in this primordial slime of the creation of life in this space. And you're trying to decipher it and play a role in it and communicate sectors of it and what that sector's doing in a Bloomberg kind of manner, as you say. And the people that are listening to this are always trying to learn. And so if they want to reach out and connect with you, how can they do that, Jonah?
Absolutely. Well, you can first reach me in my email, Jonah, Jonah, at stomarket.com, or hit me up on Twitter, Jonah Schulman. Easy as that.
Terrific. Excellent.
And how do they actually participate in the initiatives, in several initiatives that the STO Markets is undergoing through at the moment?
So the best way to find that would be to go to the stomarket.com and hit the top banner, and it will directly right to the source of where you're going to find anything about that.
Got it.
Fantastic.
Oh, fantastic. I mean, we could talk for hours, Jonah, and we do talk for hours when we talk. So hope to see you in one of the conferences, if you're not already fatigued with a billion conferences happening at the same time with the same content. But looking forward to seeing you in person, Jonah, and thanks again for coming on, sharing your perspectives, and thanks again.
Me as well. It was a pleasure, guys. Thanks for having me on.
Thank you, Jonah. Bye for now. We hope you enjoyed our weekly conversation. If you have any questions, comments, or suggested topics, please feel free to connect with either Nitin or myself on nitin@portal.am or derek@portal.am. Feel free to subscribe and share with like-minded friends. Stay well, inquisitive, and engaged. See you next week. Bye for now.